All right, welcome back. This is Stock Brock. Today I'm breaking down Texas Roadhouse, TXRH, a mid-cap restaurant stock that recently reported strong Q2 2025 results. Let's explore the most recent earnings, what to watch for next, the key risks, opportunities, and how analysts are valuing the stock right now. Let's break down the recent earnings. Texas Roadhouse reported Q2 2025 revenue of $1.5 billion, up about 13% year over year, with comparable sales rising 5.8% and average weekly sales hitting record highs. Net income grew to $124 million, or $1.86 per share, though this missed analysts' expectations by 9 cents amid continuing margin pressures. Restaurant margin contracted to 17.1%, affected by commodity inflation of 5.2% and wage inflation of 3.8%. The company now has over 800 locations, driven by both new openings and planned acquisitions of 8 franchise restaurants. Upcoming earnings. Next earnings are expected on or around October 23rd of 2025. Wall Street is forecasting Q3 EPS of $1.30 to $1.32. This will reflect modest growth year over year as the company laps strong comps and faces continued cost headwinds. Some of the risks for Texas Roadhouse include margin pressure. Inflation in food and labor costs has eaten into their profits despite strong sales growth. Growth in comparable sales is also slowing from last year's highs back to historical mid-single digits, indicating normalization post-pandemic era. Market competition is also getting broader, and broader cost inflation may limit near-term upside. Some opportunities for Texas Roadhouse continues to expand, hitting, as mentioned, 800 system-wide restaurants with ongoing domestic franchise acquisitions planned for late 2025 and early 2026. To-go sales and brand loyalty remain strong, positioning Texas Roadhouse to gain market share in casual dining. Earnings per share are expected to grow by 14% next year. So those are all strong highlights. Every time I go to Texas Roadhouse, it's pretty packed and pretty busy. So that's always a good highlight to kind of have personal experiences with a company that you want to invest in. So that's some of my personal experiences. Share yours below. Valuation price targets. Shares recently traded around about $169, near $170, with a forward PE ratio of about 26, which is historically lower than average. Analyst consensus price target for the next 12 months is $197, with a range from $162 to a high of $235. Most Wall Street analysts rate the stock a moderate buy, but highlight the risk from cost pressures and slowing comp growth. This is a name that I'm very interested in. If it goes lower, I'm definitely going to buy it. I did start a position in this company just to disclose, so this is not financial advice, but it's a company I believe in, and I definitely see growing and not stopping here. Key news, EPS missed for 3 of the last 4 quarters, signaling that the operating environment is getting tougher and the costs of food, labor is going to remain high, which is a challenge for the company, but all companies have their own challenges, and the restaurant business is not necessarily something I'm looking to get 100% out of, but maybe if I can get 15 to 20% upside from here, that's what I'm looking for. Management remains optimistic about expansion, but openly discusses ongoing inflationary challenges. So a lot of effects with the tariffs, so a lot of uncertainty for the company at the moment. Costs are kind of rising at the moment with food, and if inflation rises higher and unemployment starts to tick up, could affect a company like Texas Roadhouse. That's why I started a small position. This is a position that basically it's a strong company, reputable, gonna be around for a while. That's why I like it. But yeah, guys, let me know in the comments below what you think. Texas Roadhouse. This is Stock Brock. Peace.